What's good, everyone? So I'm going to break down this trade that I took on the 7th of May that made me just over $1,000. So coming into the day, I was very bullish. As you can see here on the higher time frame, we're expanding up and we got this retracement down, and we have this 4 hour fair value gap right here that we tapped the day before, and we were kind of just consolidating inside of it. And then during Asia session, we got a move higher, causing a break of structure above these highs. So what I was anticipating, because we got this break above from this 4 hour fair value gap, is that price wants to continue going up, right? So what I wanted to see during Frankfurt and London session was for price to come down, take out Asia low, and tap into this 5 minute demand zone right here marked out, and expand up towards Asia high. So if we zoom in here, we can see that we tapped into this demand zone, we got a very bullish candle, and we got this very impulsive change of character right here because we closed above this high. This high created this low, so we got a very impulsive change of character. Once I seen that, I knew price wanted to go higher, so what I done was I got my fib out and I set my limit orders at 0.5 or EQ of this range, and I had my stop loss underneath the low by 1 pip. We did end up coming down and inducing this low, taking out these early buyers, and then we went up. My stop loss is always going to be 1 pip below the low or 1 pip above the high anytime I take a trade, just to give me that extra breathing room in case we want to sweep out them early sellers or buyers and then reverse from that area, right? So that's exactly what happened. We got the sweep, never got stopped out. It came down just 0.3 pips below the low, and then we ended up expanding out very rapidly, and we smashed TP, giving me a 2 risk to reward trade, which made me just over $1,000. TP was at just above Asia high, as you can see here. I didn't go for any higher RR just because we had a load of liquidity here, and I didn't want to target any higher in case price did reverse. The next point of liquidity that I would have normally targeted would be this ERL point here, and as you can see, price never even went up to there during this day. I think we did go up eventually. No, we didn't. See, we never even went up there. So that's why I never really go for really high risk to reward trades. Usually just 2 to 3R maximum. So yeah, it's not a complicated trade at all. It's very simple. Bullish bias, right? We have a higher time frame POI, which is the 4 hour fair value gap. We tapped it the day before. We got a rejection from it, went up, causing break of structure. And then during our kill zone, during our session, we want to see liquidity taken, Asia low taken, tap into a POI, which was this demand, see an impulsive change of character, which happened here, EQ entry, and yeah, tourist reward. That's how I made $1,000 on the 7th of May trading Euro USD.